Well, we're here. Glad you're here for the weekly market update. There's certainly been a lot of peak interest in this past week because we went through the weekend of Silver Squeeze 2.0, and I understand that's not just a one-day event, which was marked specifically the anniversary, May 1st, of the Silver Smackdown in 2011, but it's also the start of a next leg, a next inning in the sustained unfolding pressure of the little guys against the big guys, David against Goliath. And the Wall Street Silver guys started a nationwide billboard campaign, I understand, yesterday and May 3rd, and trying to get millions of impressions out there so people are aware, get the word out, get the people aware that there's an aspect of freedom and I guess fairness, open markets, and everything that comes from people getting involved at that level. We wanted you to give us an update because a lot of potential investors and current investors are watching this market closely at this time, and they're wondering, what does this Silver Squeeze 2.0, what's going to play out? Is it just going to get ground into the dust by the heel of the powers that be, or is the little guys going to actually have a chance here to assert themselves and have reestablished free markets?
Yeah, I think it's there's no question. It is David versus Goliath. If you look at all of the commodities done again literally just about every commodity, from canola oil to gas to the grains to cattle to hogs to lumber. I mean, the list goes on and on and on. All of the commodities are signaling inflation, and they're taking off, except gold and silver, the monetary metals that should be taking off. And it's the same battle that we've been facing for a long time. But the difference this time, Dunnigan, is that there is a mounting resistance, if you will, a mounting awareness catalyzed by groups like the Wall Street Reddit Silver. These folks built a 70,000 strong following in just a couple of months. It's remarkable. And they're tireless in their efforts. And it's not just here in the U.S., it's globally. So, as I said last week, I think it was on your show, I didn't believe that this would be the match, if you will, that lit the fuse, because the dealers were prepared. But I think that there was a lot more interest on both sides of the table here for this particular week. But what it is doing, it's bringing an awareness into the industry that we've never seen before. And when you look at what's happening to all of the other commodities and to the inflation and the money supply, it's just a matter of time before the silver price really accentuates, and the gold price. And you can evidence that, in my book, by the tremendous number of ounces being pulled off the COMEX right now. That, to me, signals that the sophisticated money, the big money, is taking possession, and they're doing so in a way that's very unusual, as we've talked about for a while now. The deliveries off of COMEX is a relatively new phenomenon. Normally, only a very 1 or 2%, small percent, would stand for delivery, and now we're seeing enormous amounts delivered. If we look at what happened in March and what will happen by the end of the May contract, we're looking at somewhere 80, 90, 100 million ounces delivered between the two delivery months. That's just enormous, and that, to me, signals the biggest money in the world is doing exactly this. So it's not just the little guy. There's an awakening across the board, and whether it's the industrials or the family offices or the sovereign wealth funds, some entities are literally pulling as much metal as they can off the exchange without causing a force majeure. And I think it's a trend that we'll see increase, which bodes well for the price ultimately. But, it's frustrating. I understand. It's frustrating to see silver move up $1 yesterday and down 50 cents today. It's the 2 steps up, 1 step back. This is the same thing we've been fighting, but there's never been this type of an awareness, this type of an understanding around it. And so for that, I'm quite optimistic, Dunnigan, and I think that we will see an environment that, if this continues, where we start to see more of an encroachment into the mainstream, which very quickly will, I think, maybe change things for silver and gold to follow all the other commodities, not just languishing in the background as everything else takes off, and the two items that should be going higher aren't. I think that'll change.
You made me think, when you mentioned about silver getting public awareness, about my brief stint here, a little over a year as a bullion dealer, and how last year in second quarter, during the market crash with COVID and everybody feeling like the world was going to pot, all of a sudden, there was quite a few gold orders. Gold was on a lot of people's mind. They wanted to flight to safety. And in the last month or two, it seemed like that it's predominantly silver. That's just the norm, the default that people call me about. And it doesn't matter on the age either. It doesn't matter whether it's young people or people on the behalf of their children or grandchildren, or whether it's people that are at later stages of life, they're asking about silver first. Still some people asking about gold. But I'm wondering what you're seeing. That's my very limited exposure. From your seeing in your vantage point, the ratio or the shift of demand at the retail level between silver and gold over the past several quarters.
Yeah, I mean, most of my career it was all gold and very little silver. And this is a new phenomenon. I would argue probably 90% of our sales or more are silver. The majority of every phone call or every email or everyone calling about anything is silver. Very little, if any, about gold. It's actually kind of surprising. I would say it's 90% or better. And last year it was at least that for the entire year of 2020. So it's definitely, people realize that the value in silver, this is nothing new to all of us, but what is new is an awakening into the group of people that the Reddit people have tapped into that are awakening the same value. And a lot of it has to do with cryptocurrencies, where there's an awareness with cryptocurrencies. It basically acts as a short on the dollar. And I think you have a lot of people who are looking to dollar alternatives, and because of what's happened with Bitcoin and all of the other cryptocurrencies, they're now actually taking a look at silver. You don't find the same type of dynamics in gold that you do with silver, which potential-wise could mirror what you see in cryptocurrencies, and I think that's why you're getting more of an interest at the younger level.
Yeah, actually, we're actually seeing a connection there where people who have made a killing on cryptos are calling up and saying, do you take cryptos in payment for real metals? And we say, yes, we do, through BitPay. And that just keeps some people very interested. The fact that they can have had that windfall come their way and now roll it into something real that doesn't just evaporate overnight.
Exactly. And that's a great point. And I think people should keep that in mind, in that pulling some money off the table in realizing that profit's not a four-letter word is a great idea as it pertains to crypto. People need to keep in mind their exit strategy in cryptocurrencies, and I think this is a good way to do it. If you're able to convert to Bitcoin from some of these altcoins where you made a really big profit, switching them into precious metals and taking some of that profit off the table is a great idea. That
same basic principle holds true with other asset classes as well. You've talked to us before about the Ibbotson study that says, unlike all previous decades where you could count on the bonds to be a hedge against your stock market, or you could count on real estate to be a hedge against the stock market, now we have what everybody's calling the bubble of everything, except for precious metals and some other commodities that are just starting to move. I've got, again, my personal testimony, I've had multiple multiple real estate owners who own multiple houses, multiple apartment buildings, saying that they are selling properties, and they do not feel comfortable putting the proceeds of those sales and just into cash in the bank. They want to hedge that and to protect it in metals. So I have a number of people who are taking either their stock profits out of 401ks or IRAs into metals, or selling real estate at this rich valuation of the market and rolling that into metals. I guess that reminds me of what you were just saying about cryptos.
Yeah, I mean, there's never been a time where you have all three of those markets arguably in bubble territory, the stocks, bonds, and real estate, which are a function of manipulation of interest rates. I mean, people talk about the manipulation in gold and silver, but really it's about manipulation of interest rates. The low interest rates have created an illusion of wealth in our 401k and our house values. And now with, the only people that are taking advantage of these low interest rates as it pertains to the market are the big hedge funds who get the money at next to nothing and pump up the equity markets or invest in real estate and rental properties. And you see markets that are way, way over leveraged because of this type of an environment where you have low interest rates and you have easy money, and the big money is getting wealthier because they're taking advantage of it. The lending standards are so difficult right now that the people who need it really aren't getting any lending help, and you see very little velocity as a result of it. And that ultimately will change. I mean, Warren Buffett, when he started speaking at his last shareholders meeting, he started out by saying hyperinflation is here and pointed to all of the commodities that are rising. We're not seeing it yet broadly, but when you see what you just talked about, where all of this big money starts pulling their money out of their second and third home, the investments, or pulling it out of the equity markets because they realize that ultimately interest rates have nowhere to go but higher. So you might as well cash out at the top. Remember, profit's not a four-letter word, but when all of this money gets pulled out of these investments in cash and heads up, I mean, now you're going to start to see some substantial inflation. And where do you put your money in that environment? And especially if you're older, the older folks may have no intention of ever going into cryptocurrencies. There are very few places to do it. Here again, I will argue this market will identify itself by the inability to readily source product. And in that environment where you see a bunch of people pulling out all of these years worth of profit in search of somewhere to put it safely, I guarantee you a lot of it's going to go into precious metals, and like that, it'll disappear. So that's a catalyst right there for you to see not only massive inflation, but also the disappearance of physical product in the United States.